Good morning. This is Dylan Jovine with Behind the Markets. Today is Friday, the 30th, the last weekday in August. A lot of folks have written in the last couple of days really to talk about AeroVironment, AVAV. Shares jumped 10% this week, a little bit more than 10%, after the company won a billion-dollar contract to make drones for the Pentagon. And this is just some context. We originally recommended this stock at 88 bucks a share. We sold half of our position back in May at 189 bucks a share for about a 114, 115% gain. And we sold it because it ran too far too fast, frankly. That was part of our trimming our positions, taking some profits in the wake of the great bull run that we've had this year, and AVAV was part of it, but we still are holding the other half of our position. So we have a very big vested interest in how this works out, but we're kind of playing with house money since we locked in profits with a double, with a 100% gain. So we're playing with house money with the rest of it, so to speak. And this is an important story, though. I wanted to talk about this. So basically, when a modest-sized company wins a contract like this and the stock jumps up, a lot of folks have said, should we buy it now? This is a billion-dollar contract from the Pentagon to make these drones. And I'm still in the let's hold it, not buy it category, because even with the raised expectations, for example, Baird came out yesterday, put a buy recommendation with a price target of $220 a share, which is 10% higher than what it is right now. It's at about $200 a share. But that's 28 times expected earnings. That is not some good price to pay for a company in the government contracts business. It's a little bit too rich for our blood. This brings up a couple of other things that I wanted to talk about. When a stock jumps up after announcing a great contract or great earnings, basically what's happening is Wall Street is revaluing the shares of that company. They're saying, okay, this company deserves a new higher valuation in the wake of this news, of this material piece of news. If a stock drops down, gaps down a big amount, it's Wall Street's also saying this company is getting revalued lower. So it's important to understand that the revaluing doesn't mean it's breaking out and you just got to chase it all the way higher. Sometimes it's just a revaluation of a business, and sometimes that business gets revalued from here to here. What's a revalue? And in this contract, it's going to add about $50 million a quarter, which is great for AeroVironment. It's terrific. It gives more visibility and more consistency, but it doesn't change the basic facts of the business, which are it's growing at an above average rate. It's in the defense sector, which again, we know, I wouldn't say it's recession proof because recession bad enough. Basically, it hurt everybody, but it's basically recession proof-ish to the extent that we know military spending is staying where it's at. And we know the Pentagon is pushing billions and billions and billions of dollars to create drones. And really our job has been, really, what are the companies best positioned to receive a big chunk of that money? That's why we've been doing so well with these defense manufacturers, because the way we wage war is fundamentally changing. So we've really spent a lot of time focused on which companies are going to be the biggest beneficiaries in this kind of fourth revolution in warfare. Software, AI, drones, swarm technology, etc. That's kind of why we've done so well with these companies. I mean, in this special report alone, we recommended 4 stocks, 3 of them, which have been double. So this has been a good one for us. But again, I recommend holding our position here. I wouldn't buy it. I know a lot of folks have FOMO, fear of missing out on a run. Again, I don't see this as a fundamental big change in this business. I see it as more a revaluation, popping from here to here. It's a revaluation of a business that is growing at above average rates. And when we recommended it at 80 bucks a share, I mean, back then it was trading at 13 times earnings. It was growing a heck of a lot better than that. It was a good deal. But now at 28 times earnings, let people who don't know better buy it from us. Have a great day.